Welcome to the extension of the Coach Up podcast here on YouTube. I'm Kanisha Hart. I'm your host. I'm very excited to have with me today Angie Garner. We are going to be talking about something that you, as a business owner, as a coach, as an individual, want to know about, need to know about. I'm not even going to spoil it. I'm going to let Miss Angie tell you all about what it is and what she does. But you are in for a treat today. So thank you for joining us. And let's dive right into it. Miss Angie, can you please tell people who you are and what you do?
Hi, Kanisha. Thank you for inviting me. But my name is Angie Garner, as Kanisha has stated, and I own and operate a business called Alpha Business Services. And we offer a variety of services, but the one that we're discussing today is mortgage loan origination. That is one of the services we provide to help our community gain the path towards home ownership. And I'm
Mhm.
excited today to present information to you that will help you and guide you through that process.
Absolutely. And the thing that's so important about this, Angie, is asset ownership, right? And so a lot of times when we think about, and we're going to probably primarily be talking about homes, residential home, but I just want you guys to hear and to think about as we shift our thinking, myself included, that mortgages apply to commercial property, mortgages apply to investment property. All of these are applicable because those are all assets that, as you're building a business, your business is an asset. As you are adding to your wealth, growing your wealth, being financially strategic, mortgages apply to assets. And we want to acquire assets, not liabilities. So, but Miss Angie is going to be talking to us primarily. We're talking about residential mortgage origination and all those things. And so we're going to dive right in. And I am going to ask you, Miss Angie, one question that I know a ton of people probably don't even think about. And I have to admit, until my last house that I bought, I didn't
Mhm.
think about this. But it's so important. And that is what you need to ask a lender, a broker, before you actually do business. So, can you talk about what are the questions that customers need to ask a mortgage lender or a mortgage broker before you do business, decide you're going to do business with them?
Absolutely. And there's three different points that I like to discuss. And one of them being you may want to discuss their fees. It could vary from broker to broker how much they'll charge in order to originate your loan. So that is an upfront question that you can actually ask your broker. I also wanted to discuss that I think it's important to choose a broker that offers multiple lenders as an option for you to choose from, especially if you're that type of homeowner or prospective homeowner who has some challenges, such as a low DTI, which is your debt to income ratio is very low. You have a low credit score. Addressing those issues will come handy being able to shop around the lenders that can actually accommodate your unique situation. So having a broker that has access to multiple lenders can sometimes be valuable to the homeowner, the prospective homeowner, of course. And then I think what I'm hearing in the industry from both sides of the table, the consumer, real estate agents, that there's sometimes a lack of communication that exists between the consumer and that mortgage loan officer or that mortgage loan broker. So you want to make sure that the person you choose has established a very good communication system. Like for example, with the company I work with, just became a part of, I discovered that their communication system is absolutely awesome. It guides you from the point of application. There's an email that is sent to you to notify you where your loan is at all aspects of every stage as it progresses to closing. You are notified of that. And so I think that communication process is so, so valuable. I come to learn that personally in dealing with the insurance, home insurance, how important to have good communication.
So, you mentioned that you could have a different lender. I want to come back to fees because that's really helpful. Communication is definitely integral. But I want to start with, you mentioned debt to income ratio versus credit score, and you just use those as an example. But I understood you to say you could have a different lender based on those. And so, are there lenders that would be more beneficial to somebody who has a lower DTE versus a higher DTE, for example?
Yes. And it's well, let's just say that some lenders, as far as the interest rates, and then also there's a whole nother subsection of lenders that applies here to this question, such as there's two different types of lenders that generally works. There's the retail and then there's the wholesale. Retail basically is one. It's like your Chase or your Bank of America. They they're in the lender game as well. However, they don't. They only have few products that they can offer their potential clients, and so therefore you have to fit within those criteria. Maybe you have to have a good relationship with them. You have to have a higher credit score. And some of those things you have to fit in order to become, for them to be chosen as your lender. So that's why, and then they may only, because they have their own criteria that they evaluate, and they may only, based on certain debt to income ratios, they may only entertain certain credit scores as well as certain debt to income ratios. So there's other lenders on the wholesale side, it's a whole range of them that brokers have the opportunity to utilize to make sure and help that that client gets the best services for their particular situations, and making sure too that you're getting the best value, such as the interest rate. That plays an important part. Although there's very little wiggle room, because let me tell you, credit scores is the driver, as well as debt to income ratios. Those two things basically work hand in hand to get you the best optimum loan situations. And so, although all lenders almost play the same, and it might be slight variations in the interest rate, but then you have that opportunity to get in the game, and that's what I believe in, helping
Mm.
others to get into the game so they can become their homeowner.
Dig a little bit more. Tell me a little bit more about wholesale lenders. So, as you said, retail lenders are going to have just a set few number of products, but
Right.
what else, or give me a little deeper about what wholesale lenders have to
Yeah.
offer?
Well, wholesale lenders are pretty much, they only offer they just serve in the capacity as lenders only. They have generally have no salespeople to offer or sell their product. And that's where the broker or the loan officers come in. And so we provide that that we serve as they sales their sales team. Let's say it like that. And uh, and so that's how it operates. And therefore, that makes the broker or the loan officer have access to variety of programs to help that lender. I'm sorry, to help that potential homeowner.
Mm-hmm.
Yeah.
Okay, so tell me, typically I'm thinking about retail lenders. I'm thinking 20% down, conventional mortgage,
Hmm.
USDA,
Hmm.
FHA, um, those type of things. Are there other products? Can you tell me about any other products that either you've encountered
Yeah.
that are unique that people typically don't hear about?
Yes. So over the last 2 years, there's been an exponential growth in the DPA, which stands for Down Payment Assistance Program. And now I'm seeing that a lot of lenders are offering now down payment assistance to that potential home buyer, which is exciting.
Mhm.
And so I just want to also make a note that some of these programs do come back with, they are not necessarily grants. Sometimes they are considered loans. So you shop around for that. But one of the things that I want to let the listeners know, you may want to check in with your state, your city, or your county, because there could be some down payment assistance programs there. I know the state of California, they offer a down payment assistance program too. And you may want to check in and see what the qualifications are. And I would start there first and see if you qualify. A lot of times, the programs with the state and city and the counties are driven by the income. So if you make excessive income, you may not qualify, but certain incomes will qualify.
Gotcha. So down payment assistance being, for example,
Mhm.
typically if I needed to pay 3.5% down or 5% down,
Exactly.
this assistance program could reduce that to 1% of money that I actually have to cash. I got to come out of my pocket, or 0% that I don't have to physically bring or pay any cash on the down payment of the home, is what you're saying.
That is correct. So sometimes it's a portion of it. Like, for example, one of the lenders I'm familiar with, they offer up to $2,500 towards your down payment. And so that reduces the amount of down payment that is required for you to bring to the table. And like I said, to be aware that some lenders do require that as a loan. Um, and it has a payback feature, or sometimes they may forgive it after you have lived in the home for a certain time period as well. So just be aware that that does exist.
I love that you share that because, Angie, after I bought my house,
Hmm.
I decided I wanted to get my real estate license.
Hmm.
And one of the things that I thought as a realtor was I want to have good relationships with lenders. I want to know where to send potential clients, buyers,
Hmm.
to to do what you do, right? To
Hmm.
get their loan. And so I just started calling around lenders and said, "Tell me what products you have."
Hmm.
And to your point, I found a lender who, and this was in 2020, I
Hmm.
found a lender who said they could finance 100% of the loan. And it was, I don't remember if it was 20 and then 20% and then the 80% or what the split was.
Hmm.
But essentially, so you wouldn't have a down payment, so you didn't have to bring any cash. But they
Hmm.
did it at the second loan that they did. If you would pay on it for 5 years, and
Hmm.
then if it was not paid off in 5 years, they would forgive the rest of the debt. And I
Hmm.
thought, what?
Exactly.
But my sweet realtor didn't bring that to me.
Hmm.
And
Yeah.
two, it goes to your point. So you guys call, do your research, put the
Yeah.
extra effort in. That's
Yeah.
thousands of dollars that you
Yes.
save.
Yes. And it's more prevalent now. I mean, it's not just a few lenders that offer it now. I mean, it's quite a few lenders now that offer that. And I think that's fantastic.
Mhm.
Yeah.
Absolutely. Yeah. Okay. So debt to income ratio. There was something else that you said, Miss Angie, that I wanted to dig into. Oh, okay. So as we just talked about how I just called. How do people go about finding out these programs? What is your recommendation for them to discover the loan products that could potentially be beneficial to them that are not typically advertised?
That's a great question. Naturally, the first response I like to answer that question is, your mortgage loan professional. But at the same time, with the advent of the technology and AI and Google, and you know what, the first step, just go ahead and Google um, loan programs, because you do need to be self-aware. You need to. I believe everyone should be filled with knowledge so that you can take that back to your professional and ask them about it, and make them aware of it too, so make them dig into it and to find it. So Google it, um, locate and then if you are currently in a relationship with a loan officer, go ahead and ask them about any DPA programs. There's a lot of acronyms and they understand that language pretty well. That's the one thing that frustrates me with this or with this industry. There's so many acronyms. I
You
can't
have to
keep up.
learn them,
That's
remember them.
right. Yeah. So the term is DPA, which is down payment assistance. And then ask your loan professional about that. If there are any loan programs available, um, And like I said too, with when you Google the make that query, make sure you check into your state and your city and the county for any potential down payment loan assistance programs available to you.
Okay. All right. So we've talked about one area of interviewing your mortgage lender before you make a
Yeah.
decision. Anything else you would recommend people ask when interviewing potential loan mortgage lenders or brokers?
You know what? One thing just came up for me. You may want to check out their reviews. Um, there's sometimes you can Google the name of your loan officer, or you can go to the company they're connected with and see if there's any reviews for your loan officer. That is very helpful. I mean, I use that as a consumer myself for various purchases. But so that give you an idea to find out what their communication style is like. I think the communication piece is very important. It's terrible feeling to be lost in the process and not know what's going on and where you exist. And um, I find that very concerning when a professional is not communicating to you. And so you want to make sure that this loan professional will be able to communicate with you on a consistent, regular basis, just so that you are always aware of where you are in this process.
So good. I'm going to tell you a quick story about communication and
Yes.
poor communication. And
Mm.
I want you guys listening to know that you can always challenge stuff. This is your money, this is
That's right.
your transaction. And to your point, Angie, ask as much as you need to. And if somebody gets annoyed with that,
Mhm.
sever the relationship and
Mhm.
move on. Because one, they
Mhm.
don't need your business. And two, you're
Yeah,
not going to get the information that you need and you're not going to feel comfortable in the process.
you're right.
It's, so I had this situation where I was dealing with a realtor in negotiations. And Angie, I had sent back some requests, a counter offer.
Hmm.
And now I will say this, I made a suggestion in the counter offer that the realtor was over charging basically
Hmm.
their client,
Hmm.
and they had raised the price of the asking price of the house to
Hmm.
cover closing costs and their commission.
Hmm.
So this the realtor, we're trying to sell you a house
Hmm.
that at a lower price, and you are
Right.
raising the price to include a higher closing cost and higher commission for yourself, for your
Hmm.
client.
Hmm.
So when I saw that, my response was maybe you should reduce the price of the house and take a lower commission and
Yeah.
find cheaper closing costs for
Yeah.
your client.
Yeah.
Do you know that this realtor came back and said, do not, I'm paraphrasing, but not much, do not count my coins. You obviously do not want to do business with this buyer. And they said they would communicate to the buyer that we were not willing to negotiate on terms and we didn't want to pay anything.
Oh, wow.
And I was floored.
Yeah.
And it was really bad communication. I reported them to the commission,
Okay.
to the state commission. But I say all that to say the communication is horrible because when I received that from the realtor,
Uh-huh.
Angie, I went directly to the buyer and told them the communication that their realtor was providing to me. And
Uh-huh.
that buyer decided to get rid of the realtor because they
Wow.
weren't operating in their best interests, right? And
Exactly.
so it was just
Exactly.
really bad communication. So don't ever feel like you are held hostage, guys.
Absolutely.
It is your transaction. People work for you in this situation. You're
Yes.
not beholden to them. And communication, appropriate, clear, in your best interest communication is the most important thing. So I'm so glad
Absolutely.
you reiterated that.
Yes. Yes. Yes.
Okay. So the other question I want to ask and I want to get to is so often, Angie, I'm sure you've seen this, that there are situations where people struggle to get through the approval process, right?
Yes.
When buying a home. And again, guys, remember, we're talking about buying a residential home, but this applies to asset acquisition, period. Right.
Mm-hmm.
And so Angie, what are some things that people can do to prepare for this approval process so they can avoid some of the issues that typically they see?
Absolutely. I think one of the biggest takeaways from this will be to um, get your credit report in order. And I'm so aware of how the credit the credit score is an important piece of this whole attaining home ownership. Is how mortgage deem you responsible enough to determine whether or not you can afford this home. They're looking at your buying habits. They want to make sure that you are a good candidate for this loan. And so we have to prepare you, or you have to be prepared to demonstrate your ability to pay back this loan. And one of those things I like to first encourage others. I believe in going deep down within your heart and your soul and understanding your buying habits and what make you choose in buying and spending habits and what make you choose to spend the way you do or to buy the way you do and sometimes ignore the bills that we accumulated. um, I think searching within your heart to find that, and then determining what is it that your goals are, what your goals are, and defining those goals by writing them down, and then what it's going to take to achieve those goals. Credit score is the driver of most of our goals, to be honest, and it's an important goal in towards attaining a home ownership. So that's one. Doing some deep soul searching. Home ownership is a goal for you, it's definitely attainable. But we also don't want to take on the same buying habits, same spending habits into the home ownership game because it's a different world when it comes to home ownership. Responsibility is at your door. Responsibility to make those repairs, to pay your bills on time, to pay that mortgage, pay all its related expenses. So it's a different world, but it's also the best world, I want you to know, compared to renting. So, soul searching. Number two, evaluating your credit reports. Get in there, dig in, see what it is that is lowering your credit scores. There's a lot of information on the internet to help you in determining ways that you can improve your credit scores. I have some of those tools as well. And get in and dig in, challenge some things that's on your credit score, on your credit report if they don't belong to you, and do the work. Then, if there's something that you need to resolve and pay off, do the work. Um, Number two. So, and then number three, I would recommend keeping debt to a minimum. That's important too because that affects your debt to income ratio, DTI, that we discussed. And that's an important part of this home loan approval process as well. So if the goal of home ownership for you is is on your path, then make sure that you minimize your debt and keep it as low as possible. I do not encourage you to engage in any further debt. Minimize what you have, keep it low. And those are the three steps I do recommend. And there could be some others um, but I recommend you consulting with a mortgage loan officer who can help guide you through that process too.
That's good. And so often, I've heard the horror stories that are funny because they didn't happen to me.
Uh-huh.
The the horror stories of people going through the lending process, and then all of a sudden, the buyer decides, "Oh, I'm going to go out and buy a new car."
I've heard about that.
Right? You no longer are going to qualify for the house that you, unless you
No,
have a large disposable income and your debt to income
right,
ratio is very low. But
right.
more than likely, that $300 to $400 payment you just acquired on a monthly basis is going to completely change your loan or derail you from it. So
Absolutely. That's a that's a good scenario because I've heard of people doing that, and that's a no. Wait
absolutely
till
not.
after you buy the house, and I pray that you be able to afford both, because we
Right.
don't want you to get into where you have overutilized your credit or overextended yourself. So we don't want that for you either. But this is perfect conversation, because if you're in the market and you want to buy a car, but at the same time you want to buy a home, I would recommend you wait as long as you can, buy that house first, because that would make the loan approval process much easier because of the DTI, your debt to income ratio. It always has to be within a certain percentage. Right now for FHA is 43%. So that means that only your debt can only be less than 43% of your income. So we want to keep it manageable and want that loan approval to fly through without any problems. But that's a good scenario, a good good point.
Yes. And so people know, so you guys, debt to income ratio, as Angie has said, is your debt percentage to your gross income. But I would always caution you, just as you are building a business, you're running a business, be smart about your money. I would always recommend, and how I was operated was when I was looking at my bills and can I afford this? It
Yeah,
is my take home pay when I was working in corporate America. What is my net income? Because that gross, I don't see
yeah,
that. Uncle
yeah, yeah,
Sam
yeah,
sees that, my 401k sees that, but I don't see that. So when it comes to the money that I can physically spend,
yeah,
I don't get to spend my gross. So
yeah.
what is my net? And then what is my debt to income ratio to that? You have to calculate that yourself. The bank is not. They're going to base it off of the gross. Um,
Exactly. That is
but
true.
right. And the reason
Which
I
is
relate
good for
that to business
you.
is
Along,
because,
yeah.
oh,
I was just saying, which is good for you, when seeking a loan, but in reality, you are correct. When it comes to real life, um, your net income needs to be your driver.
yes, right. We don't get to play off of fake money that we don't see.
Yeah,
Um,
exactly.
okay, so I know we're getting close to time. I want to ask you one last thing before I want you to share how people can connect with you and work with you potentially. So, what other are there documents in addition to pay stubs and tax returns? So, in addition to those two basics,
Hmm.
Angie, are there documents that you can recommend people go ahead, find,
Hmm.
gather, know their
Hmm.
numbers, so
Hmm.
that if the questions come up, you're not wasting the lending time process trying to track these things down? You already
Hmm.
have them.
Sure, absolutely. Want to throw in too with that, with the tax return, they actually ask for Form W-2 too as well, which comes with your tax return. Um, but some of the things that you can gather, bank statements, especially if the part of the loan process, they want to make sure that you do have the funds necessary for any of your closing costs or down payment assistance. And so they do want to see those funds held in a bank. So if you have those funds held in the bank or even in a retirement fund or in a stock fund or a stock account, you may have that document ready. But this question is so important. It's usually the wage earner is easily to gather these documents. I like to address that self-employed individual, which is um,
That's who we're
they
talking
can be
to.
a little challenging. Yeah, they could be a little challenging only because if you have not been keeping up with managing your debt and your not your debt, but your income and your expenses for your business, then that could be a little challenging getting those documentation together. I will recommend that you start working on getting your income and expenses in order right now because they are going to want to see profit and loss statements or sometimes for the current year and then especially they're going to want to see tax returns that that have been filed. So if you haven't, and I find that most self-employed individuals haven't filed their tax returns, and I find too that some self-employed individuals have not managed or manage their income, business income, and business expenses. And so these are some things that the self-employed person will need to get a good handle on and start working on that right now. Employ someone to help you so that it's not an overwhelming process like a tax preparer or a staff member or employee, or get someone to help you get this done, because I can understand it being very overwhelming to address this plus address your business needs. So get those things in order right now. And only you can do it too. That's what's so unfortunate, is that you have to begin the process. You know what the income is, and you know what the expenses are. And hopefully you've been able to put all of that in a bank account. That's another. I hope all of it is documented in a bank account for you, because otherwise it's going to even be more complicated, especially if you're a cash oriented business. Oh my gosh, yes. Let's start right now to my self employed prospective home buyers. We need to start getting your data in order right now.
And
Who I
there
could
it
go
is.
on a thing that I can, the self employed, my heart really truly goes out for them, because I see a lot of them, and it's a lot of work to try to manage the business part of the business as well as manage the finance part of the business. And a lot of people fail terribly in those two in that area. So I just want to encourage you. But if you want a home, if you're not a current homeowner and you want a home, it's imperative that we get those things in order.
Absolutely. Angie, where are you licensed? What state?
I am licensed in 2 states now. Yay! I'm
Okay.
licensed in California, which is my home state, where I was born and. But in the last 2 years, I've relocated to Georgia, which is where I am now licensed as well.
Okay. So can you help individuals in all states or simply Georgia and California?
Well, I can help in all states. I can refer business to other states in which I'm not licensed through my company
Okay.
that I am brokered with, which is Amerifund Home Loans. So through that process, I can, but I can work directly with individuals that are actually in the state of Georgia and the state of California. But
Wonderful.
I'm always open to share what I know to help an individual, no matter what state they're in, without cost. I think this information should be free, you know.
Okay.
So
Yeah.
yeah,
How do people connect with you?
okay. So you may go to my website, which is alphabusinessservices.net. There you will be able to find tools and resources that's related to my business. And you can also reach out to me by going to the request appointment tab and reach out to me, and then I'll send you a schedule and we'll be able to communicate.
Love it. Thank you for bringing this information today. It's so important that you guys hear caution of where to get your stuff in order, and also the information that you may or may not have been aware of that can still be beneficial to you. And Angie, you brought both. And so thank you for sharing today. As you said, this information should be free. And I know it's going to be helpful to my audience. And so thanks for being here.
Awesome. Thank you, Tanisha.